Hey, Saretsky here. Welcome back to the show. Lots to touch on this week. We've got some updates in the pre-construction market. We've been talking about it at length on the show for really well over a year now, and it's kind of reaching a boiling point. In fact, it's really actually leaking into the mainstream media. So I want to touch on some of the data points that have come out recently. We have some updates on government policy as well. I'm going to walk you through exactly what we're seeing in that space. But first bit, a little bit of housekeeping. I've been doing this YouTube channel now, and there's Saretsky Real Estate Saturday morning videos for basically a decade now. And over the years, I've actually met a lot of interesting people through it, and actually have hired several people through it as well. And we've currently got a spot open for an executive assistant on the Saretsky Group, or a top producing real estate team. Yes, outside of YouTube, I do actually run around and sell a lot of houses. That's kind of my day job. So we are looking to fill an assistant role. So there's going to be a link, or not a link, there's going to be an email in the description below where you can send your resume if you're interested, or if you know somebody, encourage them to apply before we go sort of the traditional route of hiring. Because again, like I said, we found a lot of interesting people, a lot of good talent over the years just through the community that we have here on YouTube. So highly encourage you to check that out. Let's dive into the the news of the week, really. If you're looking at the headlines on mainstream media, you were looking at they were announcing that it was the seventh consecutive month in the GTA for all time record low new home sales. Again, not resale sales, but new home sales. New home sales hit all time record lows for 7 consecutive months, which is the longest losing streak, even longer than back in the 1990s, which was kind of the lost decade for Toronto real estate. I think in real terms. So on a nominal basis, it was a 10-year housing correction. And I think in real terms, again, adjusted for inflation, it took close to 20 years for those home prices to actually rise in real terms and surpass their previous highs. So we're in the midst of this substantial and severe housing downturn. And it is particularly focused in the GTA and a little bit here in Vancouver, but the GTA, again, 7 consecutive months. If you look at condo sales for the month of April in the GTA, I think it was 105 condo sales for the GTA. Just to, and again, give you context, there was close to 4,000 in April of 2021. So you're down to 105 condo sales in the GTA. Essentially, there is no sales, period. There's basically no liquidity. This was a market that was predominantly sold to investors. So again, if you're waiting for a high rise in the GTA, you might sell it 5, 6, 7 years in advance of completion, because you have certain bank financing requirements you have to hit. You got to pre-sell typically 65% of the building. And people that want to wait 6 years for completion oftentimes are investors. And so that investor bubble has burst. We know that, obviously, at the expense of rising interest rates, rising maintenance costs, and now at the period where you're in declining rents, the appetite to own, negative cash flowing real estate just doesn't make sense, and it hasn't made sense for a while. But finally, the catalyst that kind of burst that was, in fact, higher rates. And I've said before that, the decade of zero interest rate policy, negative interest rates for over a decade, was really what created the phenomenon of dog crate condos in the sky. Basically, these little junior, tiny 400, 500 square foot condos that were pre-sold to investors. It was because they weren't earning any sort of return outside in safer investments. You think of GICs, you think of bonds, traditional sort of savings accounts were not yielding any rate of return, zero interest rate policy. And so pushed people out on the risk curve. And basically, real estate became, again, the number one store of value in Canada. And I've argued before that nobody in Canada really gets that excited about the TSX. And so what they do get excited about is a shiny new condo at the presentation center. So that's what drove the dog crate condo environment. And again, that has collapsed because of rising interest rates. And what you're seeing now is a buildup of inventory in the resale market, where you've got almost 8 months. You've almost got 8 months of supply in the resale market. And so you think about a developer, where how do you compete as a developer launching new product into an environment where you have 8 months for sale on the resale market? There's no need to add more to that in the new construction market. So that's why you've seen 105 sales for the month of April. But this is really not a whole lot better in Greater Vancouver. Again, where I am here located is if you look at again Altus Group data, a publicly traded company that runs all these data sets for the month of for Q1 you had something like 82 condo sales in Q1 for all of Greater Vancouver. I'm not talking the city of Vancouver. I'm talking about Greater Vancouver region. You had 82 condo sales for Q1. And to go back, just to put things into context, when you had the raging bull market in Q1 of 2021, we had close to 3,500 condo sales, now down to 82. And so the issue that you're seeing today basically is the where I start to get worried is to say, okay, um, you can see what's happening today is think about all the construction workers, the industry, right? We just heard Rennie, which is the largest resale marketing firm in Vancouver, cut their headcount by, I think it was 25%. Well, again, when you sell 82 condo sales for the entire quarter, I mean, you can't keep the lights on. And so where I start to get worried is the construction industry specifically. These are highly trained, highly skilled jobs that are keeping busy enough today because the construction pipeline is actually relatively quite full, which is to say that you actually have not quite, but you've got near record high number of units that are still under construction. They're actively being built. And soon, over the next 12 to 18 months, a lot of them anyways, will start to complete. And so where are those skilled laborers then going to go? Because there are actually no or very few projects for them to move on to 18, 24 months from now. And so that becomes a real concern because, again, that is a highly specific skill set that people have worked and trained for many, many years. And we're trying to immigrate more of them over here to do this work. And so if you have no work for them, they basically become unemployed. It's hard to you can't just leave that industry and start, become an accountant and go in a completely different career set. So that's where the real issue I start to get concerned about is because the pre-sales are running at levels you haven't seen in 30 plus years. This is a real crisis that is playing out in front of us. Ironically, we looked at some government policy that was obviously heavily debated during the recent federal election, where both the Conservative Party and the Liberal Party talked about removing GST on new homes. We had Mark Carney out this week, who finally is putting through the legislation to remove GST on new homes. I guess in part hopes to revive the construction sector, but also to alleviate costs for new buyers, specifically first-time home buyers, because the new GST exemption is only going to apply to first-time home buyers, and it's only going to apply for those that enter into a purchase agreement from May 27th of this year, May 27th onwards. So anyone that bought a pre-sale over the last 2, 3, 4, 5, 6 years ago, waiting for it to complete very, very soon, you will have no GST exemption. No GST exemption, only for new contracts that are entered into May 27th onwards. And those contracts, no GST up to $1 million, and then a sliding scale between $1 million to $1.5 million. So there's really no relief there for pre-existing buyers that have to close on condos that are completing that might be underwater, and a good chunk of them are. And there's certainly no pressure that's going to alleviate potential people walking away as well, which of course we're hearing stories of that in Toronto and in Vancouver. So not a whole lot of relief on site. And you kind of look at, again, the development community and say, well, again, if you're competing, because I get all these reporters that reach out and say, well, what's it going to take? What's it going to take to sort of, change the direction and get the pre-construction market moving again? I don't think there is anything in particular other than the cycle needs to play itself out. You're going to see a cleansing. You're going to see defaults. You're going to see lower prices. You're going to have to see development prices are going to have to get closer to resale prices, because right now there's a decent sized gap between the cost of a new home and the cost of the resale market. And obviously, we're seeing again today, there's downwards pressure on the resale market. So you have to close that gap where it's enticing enough for investors to jump back in, or even end users to jump back in and buy a pre-construction unit. And what we see today in Vancouver and the GTA is you've got new home prices anywhere from 10 to 20% higher than the resale market. When the outlook is lower prices, who wants to pay a premium and wait and take on that added risk? And so the developers have to get more competitive. The issue that you have today is there's no room. There's no room to cut. There's no room to cut on the developer side. There's basically no profit in the majority of these projects launched today. If there was, you would see sales launching, you would see projects launching, and you would see sales being absorbed. There's really no profit margin involved. And if you actually look at, again, and not to say there wasn't, but today there simply isn't. If you look at some data that we have from a friend of the show, Mike Moffat, which is showing, so if you look at, think about a developer, right? So if you think about a developer and you're launching today, well, you can't control land costs because you probably already bought it. But in many cases, what we're seeing today is land costs. Land costs are down about 50% from the peak in Vancouver. So again, even at a 50% reduction, the projects today he bought and tried to launch, many of them just aren't economically viable. So, but you can't really change your land price because you probably already bought it. Number one. Number two is you can't change the cost of materials. These are globally traded commodities, right? Copper, concrete, et cetera, all these products that go into the cost of new construction. You layer on all the tariff stuff that's impacting pricing as well. So you can't change your land, you can't change your material cost. You can change the labor a little bit. I mean, you can ask the plumber and the electrician to take a lower salary, which is slowly starting to happen. You can't really change the interest rates because you don't set interest rates. Nobody really sets interest rates. Those are, again, largely traded on the open market. And so the only thing that you can actually change immediately, as in like with a stroke of a pen, you could change tomorrow, is government fees and taxes. And I think this is exactly what cities and provinces are going to have to do. They're going to have to cut development fees because what's going to happen is, again, no projects being launched means no tax revenues coming in. No tax revenues coming in. So you're better off to at least trim them, get some of these projects economically viable, and take just a little bit of something as opposed to nothing. And I think that's exactly what's going to happen. So if you look at some of the research from Mike Moffat, who again is a policy advisor, I respect a lot of the work that he's done. Don't necessarily agree with all of his takes, but I think that he has some intelligent data. And if you look at the cost of a new home in Vancouver, so he takes the example of a $1.35 million condo in Vancouver, and people say, well, that's a pretty big number, 1.35 for a condo. Well, a 2-bedroom condo in Vancouver, 900 square feet, that's $1,500 a square foot. I can tell you this, you are not launching a single project in the city of Vancouver, at least on the west side, below $1,500 a foot. So really not that far off. So 1.35 million, 19% of that cost is going to government fees and taxes. That's development cost charges, GST, land transfer taxes. $253,000 of that is going to the government. Ironically, the profits to the developer would normally be about 111,000. And again, we've talked about that profit on that pie chart today really doesn't exist. So that is why very few projects are being absorbed today, and that is why very few projects will be launched in the very near term. The cycle is going to play itself out. I get incredibly worried about the state of the labor market. The construction workforce in Canada is roughly about 8 to 9% of the labor force is employed in the construction sector. And I think a lot of them are going to be looking for work over the next 12 to 24 months because pre-sales are the ultimate leading indicator. If you have a concept of a development, you've acquired the land, you now have to go resell it in order to get the bank financing to put the shovel in the ground and then start building up. And so if you can't get pre-sales, the projects never happen. There is no construction. There's very little work for those that are employed in that sector. So that's my thoughts this week. Keeping an eye, obviously, on all the policy stuff that impacts us. I suspect as this drags on, you're going to see more government involvement. And I think that's why you've seen Carney has come out and said, we're going to build affordable housing. What he means is government housing, social housing, because that is the only person that is actually going to build in this environment today, because the private sector is getting strangled. There is no profitability. There is no absorption of pre-construction sales. And so you cannot build. And so the government, I think, was what's going to happen here with taxpayer dollars, is going to come in and start building subsidized social housing, not housing to own, but government styled social housing. So as always, hope that helped, and we'll see you next week.